All right, we've lots of stock-specific action to track today. We'll just get to all of that in just a bit in our special Top 10 segment. We're looking at names like Axis Bank, All Cargo Logistics, Punjab National Bank, ITDC, PB Fintech, and Adani Enterprises. That's on our radar on the back of positive news flow. Lupin is the only stock that is likely, in terms of news flow, which perhaps starts weaker. All right, we have our, and we'll get to all those stocks in a bit. Rajat Bhattacharya is joining us now. He's Senior Investment Strategist at Standard Chartered. Rajat, great to have you with us here. Good morning. Thanks very much. How are things set up, Rajat? You know, the market here, of course, is the benchmark, the oldest index, the Sensex 30 made a new high. And I guess we'll wait for the Nifty to do the same, which is the more widely tracked now. Globally, how are things looking? Is the global setup supportive of continued rally, or you think it provides more speed bumps and roadblocks?
Yeah, Prashant, I think the global rally is now close to the tops for this. We've been talking about this bear market rally for a while, and I think it is now time to fade that global equity market rally. Now, that means the US, the Europeans, they've shot up significantly, right, over the last 1 month. But there are signs now they're hitting close to those resistance levels, like for the S&P 500, they're close to the 200 DMA, from where they've pulled back twice this year. Similarly, in the Euro Stocks 50, I think that they are heading towards that April high. So they are peaking, I think, now. The overall thing is that we just went through our own team, debate, the annual debate. And we have some news in the sense that we now have greater conviction that the dollar has peaked, the US Treasury yields have peaked in the cycle. So whatever we saw earlier this month is probably going to be the top in the cycle, which is good news for emerging markets, so which is good news for Asia. So the conclusion being that it's time to fade the rally, equity rally in the West, and probably add your exposure towards emerging markets and especially Asia and Japan.
Hi, Rajat. Morning. Tilting towards emerging markets for a bit of a good close to the year. That'll be fantastic news for the bullish sentiment here in India. But, I recall a couple of times you have mentioned that from the Fed, you're working with a 50 basis point increase in the month of December. Some part of the markets were expecting a 75 basis point. Have you changed your view out there, or 50 basis points, you won't be surprised, right?
No. So that's factored in. You're right, Nigel, that we're still expecting 50 basis points in December, and probably another 50 basis points in the first half of next year. So that might slow to another a couple of 25 basis point hikes in the new year. But that's about it. So, and the market is priced. The terminal rate, if if you watch that, is around 5%. So we are almost there. And the markets, as I mentioned, the Treasury yield market has priced that in already, which means the dollar is also has priced that in. There is a chance, I must add, that the dollar, broad dollar is facing support here after the pullback. So there is scope for a near-term bounce in the dollar. So near-term pullback in euro dollar, for instance. But the big dollar call, which is the longer-term call, 12-month call, we've probably seen the peak on that.
Okay, Rajat, the other thing is China, right? Which directionally seems to reopen, but I guess cases are spiking, so they are putting restrictions again. But broadly, and that is important for oil and metals, etc., metal prices for both these commodity sets. What's your sense? Direction is clear, reopen, or you think there are doubts once again?
Yeah, they did reopen, Prashant, and we saw a lot of the municipal governments, the local governments open only to see that spike again. So we were cautious about the pace of reopening. We have always said that, probably the biggest reopening will happen after spring, after the winter season's over. And these surge in COVID cases, now they're at a record high in China now, means that is more the case. It's going to be gradual. But our bigger, surprise has been how policymakers have accelerated the pace of easing in property sector measures. They are probably going to cut RRR rates, so the reserve requirements for banks. The State Council, the Cabinet has already kind of approved that, and we are waiting for the PBOC to cut RRR anytime now. Now that follows the other measures that we've talked about earlier, which eases the rules for property developers. They're targeting more financing this week. More commercial banks have eased liquidity for property developers. All those are signs of a bottoming process. We've seen the sharp run-up in China's stocks, and if the dollar peaks, the broad dollar peaks globally, that's going to be another big support for China, and that means the other risk assets as you talked about. So we've seen Aussie dollar pick up. We've seen the run-up in some of the base metals. Base metals, we are more cautious because of the global recession worries, the Western recession, right? We are probably going to see a recession in the US and Europe early next year. And that means that there is a cap to the base metals, so to speak. But overarching view is that it's time for stocks, equities to benefit in Asia and also the Asia dollar bonds market.
Okay, all right. Rajat, what about the toss-up between India and China? It's getting tricky right now. I mean, we are the outperformers, mind you, and we have shown that, perfect form in 2022. The only point is everything comes at a price. Has China come to that price where you prefer that in comparison to India?
Between China and India, as we've maintained, we still like India in terms of the longer-term trajectory, right? So the growth is there, EPS growth is there, but China has the value factor. So, China stocks have run up from very low levels. The valuation is still rock bottom, 9, 8, 9 P, depending on the index you look at. Now that is way below long-term averages, even if you put a discount to global equities valuations in China. So China, I would say that the right strategy would be don't give, you wouldn't sell India, right? So you hold on and probably add averaging into India, but diversify. Asia, the broader Asia markets, Korea was beaten down, Taiwan was beaten down, Southeast Asians were beaten down, China was extremely beaten down. So the prudent course would be going forward to diversify across Asian equity markets.
All right, Rajat, we'll leave it there. Thank you very much for joining us. Great speaking with you. This China question is an interesting one. I was speaking with someone yesterday who said that investing in China is like a top-down call. It's not about specific stocks anymore and that call has to be made not at a fund manager level, but chief investment officer or higher ups, because it's a call about the country, it's a call about politics, it's a call about, since the largest funds are all US based, your own government's attitude towards China. They're seriously trying to restrict China's influence.
And that's what India's gaining.
And India's gaining. And amidst all of that, for funds to take a call that we're going to go big on China, however cheap stocks may be, that's just not going to happen unless it's a top-down kind of a call, a bigger call.
Prashant, the other point is the crypto world. We are wondering whether it will have a ripple effect, right? I don't know whether it's been good actually for equities ultimately, because people have realized there's no easy bucks or no big fast money. If you want to play a risky non-bond, non-fixed asset, then rather put money in equities than try any of this fancy stuff. That's because we have seen no impact whatsoever on the equity markets, and one would have thought there would be some correlation, but that's not appeared at all. So just a thought.
Especially in India, right? Because I think
brilliant stuff.
We've kind of dipped into the bulk. There were a lot of doubts when the government came down hard and stopped and everything, but I think it's now for everyone to see that it's been for the better, most definitely. We'll take a quick commercial break here. Our list of top stocks to watch lined up. So that's the conversation we'll have with our research team on the other side. Stay with us.